What is up, YouTube? I'm Adam Odell, Chief Investment Strategist of moneyandmarkets.com, and I'm joined once again by my research analyst, Matt Clark. And we're here for another episode of Ask Adam Anything, where we field your questions. You can drop them in the comments below. You can email them to us. Matt will give you the email address, but really pretty much anything you want to ask me. We love talking about the markets, and we want to know what's on your mind as far as questions and see if we can provide some solutions. So Matt did not give me a preview of the question this week. He said I would be able to answer it off the top of my head and that it was a juicy one. So with that little bit of intro, I'm curious. So I'll let you take it away, Matt.
Yeah, I didn't want to give you a preview on this one just because there's a little bit of backstory behind it. So I'll read the email in its entirety so that you get an understanding of kind of where it all comes from. But I do want to mention that if you do want to email a question to Adam or to myself or to Green Zone Fortunes co-editor Charles Sizemore, you can do so. That email address is feedback@moneyandmarkets.com. We'll try to flash that down below and let you know how you can reach out to us. And if we do use your question, or if you submit a video of you asking that question and we use it, we're going to send you some Money and Markets gear. So Keith submitted our question today. And so Keith, be on the lookout. So we are going to, the team's going to email you and get your contact information so we can send you out some gear. Now, it's a little long, so I apologize for that, but I feel it's important to kind of get the whole scope here. And I'll start out by just reading the email and then we'll go from there. And he says, I understand you guys look for the best investment. However, these people that you're recommending that we invest in overall, such as green technology, Tesla, et cetera, the people who run these companies are doing really bad things to the public. Elon Musk launches surveillance satellites into the sky. The 5G technology will make it so everyone is tracked and anyone who dissents will be punished through their social scoring system. Do you have any concerns that these new technologies will enslave us all in the hands of really evil people? My moral compass makes me not invest with people like Bill Gates, Elon Musk, Jeff Bezos, etc. I'm not against technology. However, it seems to take our rights away and get us more and more surveillance. And the Green New Deal mixed with the Paris Climate Accord will put everyone out of business except big business. He goes on to say, I will probably be ignored. Thank you for reading this if you did. Thank you, Keith. Well, Keith, we did not ignore you, not by any stretch. And I'll just kind of let Adam unpack all that because there's a lot there. He mentions, basically, I think the gist of the question here, Adam, is that, technology for its positives in the view of some also comes with a lot of negatives, and a lot of those negatives can be social negatives, if you will. So I guess, in answer to this question, do you have any concerns that the technology and the companies that we talk about, whether it be through Green Zone Fortunes or Home Run Profits or whatever through some of your services, that those technologies are going to have a negative impact on our society?
Yeah, I mean, this is a great question, Keith, and I'm not sure why you thought we would ignore it, because actually we do have other readers that write in, similar types of concerns, and I do believe your question absolutely gets at the zeitgeist of the current times, which is, does big tech have too much power? I don't know if evil is the right characterization of them, but do they have too much power? Are they too intertwined in our lives? Are we the product rather than the customer? Is there infringement of our privacy? Is there infringement of our rights as free Americans? And I certainly understand the feeling that we are getting close to that, if not already there. And certainly, if you extrapolate the type of market share and the type of control and influence and power that big tech has had over the current bull market, if you extrapolate that over the next decade, I certainly understand why folks are concerned. I do want to clarify, we have not recommended buying Tesla. We do recommend in stocks within large technology-driven, innovation-driven megatrends like 5G, like electric vehicles, like renewable energies. So we do look for those because, frankly, those are the themes, those are the industries and the technologies that are growing far faster than the economy. And if you want to beat the market, you need to buy companies that are growing earnings faster than the broad market and faster than economic growth baseline. So I appreciate that Keith says he's not against technology, because that's where a lot of the gains are going to come from over the next 1 to 10 years. Is, that's kind of how it is. I mean, technology is pervasive. And what you pointed out, Matt, which was a keen insight, is that, with the benefits of technology, there are negatives, there are drawbacks, there are unintended consequences, or even consequences we know about. So all I'll say, Keith, is that you do not have to invest in big tech to invest in technology. You don't have to invest in Tesla to invest in the electrified vehicle market. You don't have to invest in these big tech companies. There are smaller companies out there who have much less power, who have much less reach as far as reaching into your home and your privacy. And they are going to bring innovative technology solutions to the market. And so that's where I would look. And in fact, that's exactly what we do in the service that Matt and I and our colleagues, Charles Sizemore, run, Green Zone Fortunes. So Green Zone Fortunes is our flagship monthly newsletter, where every single month we send out a very detailed report on a company that we recommend buying into their stock. That recommendation is based on a number of factors. First of all, our own, discretionary expertise about what we know about the industries that we're fishing in. But we've also built a proprietary stock rating model, and it looks at 6 factors. 3 of them are technical, so momentum, size, and volatility. And then 3 of them are fundamental based, like value, quality, and growth. So we're looking for companies that are well-rounded. And since you mentioned big tech has driven a lot of the market gains in this current bull market. So out of the 2009 bottom. So if you, generally speaking, during this bull market, if you bought bigger companies, you fared better than if you bought smaller companies. But that's really concentrated in a small handful of the largest companies. And I mentioned the word extrapolation earlier, because that's there's a bias that we all have psychologically that's called the recency bias. And it basically says that we assume that whatever has happened in the recent past is just going to continue happening. It's going to be extrapolated into the future, and it's not going to ever change, or there's not going to be any mean reversion or reversals of those trends. And over the long run, there's been a ton of academic research and practitioner research and practitioner results. I mean, funds that actually run these types of strategies that prove very convincingly that smaller companies, smaller cap stocks, do outperform large cap stocks over many market cycles. So I think that what we've seen over this past, say, 5 to 8 years has been atypical in the sense that there has been a lot of concentration of power and market share gains and stock market gains from the small handful of big tech companies. But I don't think that's going to last forever. So I think that the way to go would be to look for, I'm not saying to short Amazon and Tesla and Apple and Microsoft and Google, but I'm saying to look to put your investment dollars on the bullish side elsewhere. To give you an example, in Green Zone Fortunes, we've put together a portfolio. It's probably nearing about 24 positions right now. And the median market cap of our recommendations comes in at $2.5 billion. So $2.5 billion. The billion sounds like a lot, but that's actually small, rather small. The cutoff between a small cap company and a mid cap company is about $2 billion. So we're basically looking for mostly small cap stocks, small to mid cap stocks. We have a few large cap stocks in there, but I guarantee you we don't have Google or Tesla or Microsoft or Facebook or Amazon. We do look for more innovative and more creative and smaller ways to invest in these trends. So, Keith, thank you for your question. I'm sorry you thought that we would ignore that. I can't tell you whether big tech is evil or not, but I do think that the days of their run of grabbing significant market share and pricing power are probably coming to an end. That doesn't mean they're going to go by the wayside. But we just saw a ruling against Apple for non-competitive practices, where they basically had captive all the game makers and all the app developers had to run payments through the Apple App Store, and they were just ruled against. So now, if any company can build an interface that persuades the customers to leave the Apple App Store and actually purchase through the developer directly, they're going to keep that 30% commission that they were basically given over to Apple. So that's, I believe, may be a catalyst for showing that society and the regulators are willing to take some control and power back from big tech. But at the end of the day, just ignore big tech. I mean, you can only do so much. And if you want to invest in technology, come over to Green Zone Fortunes, because we find a lot of small companies that aren't run by folks like Elon Musk that can do a lot of great things for your portfolio and for your moral compass as well. I appreciate that as much as anyone. So thanks for the email, Keith.
I just wonder, and this is not necessarily a question for you, but it just kind of brings up an interesting thought that I just had as I was listening to your explanation and answer to the question here, and that is about, and I really don't know what the proper wording for it is, but I guess conscious investing, and that is a conscience investing, which is investing in companies that are aligned with your conscience and not necessarily that are aligned with making profits or in this one sector or this one sector. I'm just wondering, is there a broader place for that now in terms of where investors could look? I mean, I know we always talk about, invest in something, invest in something you're passionate about, invest in something that you want to get to know more about, things like that, because it makes you more engaged whenever you are looking for investments. But this kind of takes us to a whole new level, and that is, investing in companies that are kind of in line with whatever the individual investor's moral compass is, as Keith pointed out. And I'm real briefly, Adam, what's your thought there?
Great question. We should actually do a separate episode on this because it's a meaty enough topic. But you're essentially talking about ESG investing. ESG is an acronym for environmental, social, and governance. So basically, the idea is that investors, rather than wanting to buy the S&P 500, which is a collection of 500 companies, good and bad, which includes companies that you may not feel comfortable with what they're doing, as far as what they're doing to the environment or what they're doing to society. And I'm sure Keith would be concerned about, what Google and Facebook are doing to society, or how they're governed, how they run their company. Is there diversity and women on the board and in the C-suite? So now basically what you're getting at is people get to vote with their investment dollars on what type of companies they want to support. Again, well, let's get into this in another episode, but to give you a preview, there's two ways to do it. There's negative screening, where an investor could say, I don't want to invest in companies that, drill for oil, for example, and they take those companies out of the index that they want to invest in. There's a different way to do it where you handpick the positive attributes that you want in a company, and you only select those. You're not necessarily excluding certain companies, but you're choosing the ones that are governed and have the best practices. Another issue of this topic is that it used to be believed that if you invested for the good or for your moral compass, that you would lag the market. But more research is coming out showing that you can either match the market, meaning you can very closely benchmark to the S&P 500 and still get the same exact return and risk profile, but just investing in slightly different companies that are more in line with your moral compass. And then other studies are actually even showing that you may actually, over the long run, outperform a naive benchmark, because the theory is that the companies that do good will end up doing well, meaning for themselves and for their investors. And, this is a new field, but ESG investing is absolutely growing very, very fast right now. So it will, again, to use the word, be part of the zeitgeist of the next decade for sure. So Matt, remind me, let's do another episode on that.
I agree. I think that's something that we should be doing here in the near future, to talk more about ESG and the type of conscious investing that we're looking at here. Adam, I appreciate your time as I do each and every week, and I know our audience does as well. And I do want to thank everyone who does watch not just Ask Adam Anything, but all of our videos that we have on YouTube. We put out videos almost every day of the week, just about. There's Ask Adam Anything, which we do. We have Investing with Charles. We have the Bull and the Bear podcast, and we have the Marijuana Market Update. Amongst all the videos that we put out on YouTube. And thank you for everyone who is subscribed to our channel. If you're not, hit that subscribe button and mash the notification bell so you get notified every time we release a new video. If you are and you watch, Thank you so much. Definitely appreciate it. Make sure you check out moneymarkets.com as well. We post new content each and every day from myself, from Adam, from Charles, from our entire team. We work very hard all 7 days of the week to make sure we're giving you safe, sound, smart, simple, profitable investment information for your portfolio. And again, that email address, if you want to ask a question for Adam, for myself, for Charles, you can do so. Email us at feedback@moneymarkets.com, right down below there, feedback@moneymarkets.com. And we would love to see what you have to ask. This question from Keith was great. Keith, check your email. The team's going to send you out, going to ask you about some contact information so we can send out some money markets gear for you. And that is a benefit. If you do submit a question and we do use it, then you are going to be in line to get some money markets gear. We have some more coming, I heard yesterday. So that is good news that we have even more gear on top of what we have already. So make sure you do that. Adam, thank you so much for doing this, and we will talk again next week.
Thank you, Matt. Take care.